Thank you everyone for joining at lunchtime today. I know you're probably all busy with your day-to-day roles and things, so thank you for taking time out during this lunchtime. And I'm sure it'll be a really insightful session. Sabrina's a regular at this, so she's guaranteed top class insights and intel, so she won't disappoint. So we'll kick off. As I said, there will be more people that come in, and the plan for today is to kind of give a quick snapshot of Sabrina's background, the journey she's been on. We'll do a quick Q&A session and then some deeper dives into leadership, core values, and scaling finance teams or building best-in-class finance teams. We've had loads of questions that have come through in advance, Sabrina, so I will be keeping you on your toes, firing them at you. Hopefully there'll be 5-10 minutes at the end. Should other people have questions, then put it in the chat box. There's obviously quite a lot of people to see people's hands or anything, so put any questions you've got in the chat box. I'll try and jump into them as and when I can, but we've had so many questions that have come through in advance that I'm going to try and chair it so we can get through as many of those as possible. So without further ado, Sabrina, do you mind just giving us a walkthrough of your background?
Yeah, sure. Anyway, it's lovely to be here. Hello, everyone. I'm Sabrina Castiglione. I'm CFO at Tessian. For everyone's benefit, I started my career in professional services, in pensions, actuarial, great mathematical grounding, boringest thing in the world that you could possibly imagine. So I did that for about 5 or 6 years before deciding to go and move into startups. And so in October 2016, I joined what was then check recipient, now Tessian, as person number 7. Back then we had a handful, sub 10 customers, less than $250,000 in ARR. I was person number 7. Today we're pushing 300. We have around $30 million in annual recurring revenue, and we've completed our Series C. So it's been an amazing kind of journey over the last 5 years, kind of building everything out from the ground up. And in terms of what I look after, when I joined, we had two technical co-founders who looked after everything R&D. We had a commercial co-founder who looked after everything sales and marketing. And there was just kind of like an everything else shaped whole of all of the G&A stuff that they needed someone to look after. And in a nutshell, that's me. So I have looked after finance, legal, people, talent, information security, and IT, gradually shedding like some of these bits and pieces as the role progresses. But yeah, a bit of a generalist, doing a bit of everything, but marrying it all up into the big picture. So that's me in a nutshell.
250,000 ARR to 30 million, did you say?
Yeah, plus.
Yeah, 30 million plus obviously the seed, Series A, B, and C rounds.
Yeah, that's right.
And now you say 300 staff.
Yeah, we're around 300. We've hired to 300. I think today we're about 270.
The lunch run costs a bit more than it used to, doesn't it?
It does. It always reminds me of the anecdote that Uber spent, hundreds of thousands of pounds on, anniversary balloons before they realised. It's funny how these things can gradually add up.
Yeah, very, very, very interesting. We'll dig into all of those areas, or as many of those areas as possible, but we're going to do a quick fire round. You have been involved in one of these before, I believe.
Yeah.
And you did. There were some answers where it was more than like a sentence or more than a word.
Okay, I'll be quick this time.
So we're going to be a little bit harder.
Sure thing.
I'm joking, but I'm going to fire off. So startup or scale up?
Scale up.
Best finance system you have used?
Google Sheets.
Best tip for a first-time CFO?
Get closer sales.
Best technologies to automate?
Zapier.
If you could only have 2 external advisors, who would you choose and why?
R&D, tax, credits people, just because it's a lot of work and like it's a big distraction. And then Probably just a legal advisor, just to stop you going too far wrong, especially around fundraisers.
Yeah, very good. Should data teams feed into the CFO role?
Yes.
Should HR people teams feed into the CFO role?
In an early stage company, yes.
Now, I don't need names on this one because someone has previously questioned. They almost gave me a name. So yeah, just a disclaimer, no names required.
Sure.
Biggest hiring mistake?
Uh, People and talent are the hardest areas of the business to hire for.
Yeah. Why is that, do you think?
I think because it is so tied to culture and it's really easy to get misalignment there, but because of the nature of the role, any misalignment there gets kind of magnified through it. It like sets off like a feedback loop. If you have someone in like a culture role that is misaligned to the culture, it has like a bigger impact on like the negative consequence. So yeah, some of the most damaging mishires have been bad people, and equally some of the most absolute superstars have been amazing people, but people hires are incredibly hard to make right.
When you actually think about it logically, it does make complete sense.
Yeah.
But I hadn't thought of it quite in that way, so that's very interesting. Best tip for managing a superstar?
Yeah, give up your Legos.
Yeah, like it. You've obviously transitioned in the last 18 months, and we had a call about this 12 months ago or so, but what's been the biggest success from the move to remote?
Yeah, so I'd say the biggest success is embracing flexible working and allowing people to work in whatever way works best for them.
And biggest failure?
I think
or negative? I mean, it's
yeah,
difficult to say failure.
I think we underestimated how if you are a hybrid or part remote team, you have to be remote first, and we didn't clock that straight away. And now we have, and it's embedded. Even if people are in a room, if someone is remote, everyone's on one screen on Zoom, and it's all set up in that way. But if you are hybrid, you are remote first.
So am I right in thinking that your classification of that is in meetings, some people would be in-person meeting and the others would be a remote on Zoom, or how?
Yeah, so let's imagine you've got a meeting of 10 people, 6 of them are in an office and 4 are remote on Zoom from home. Those 6 people in an office each need to be on one of their, squares like this, rather than just one big central meeting room. And you have to effectively act as though everyone was remote, not have those side in-person conversations, and have it as though they were remote conversations.
Yeah, I think that's incredibly important. And I think there's a lot of people that made that mistake because you're just learning on the job, weren't you?
Yeah. I mean, a hybrid work is in like a very scaled up way quite new, and obviously there've been like lots of companies that have done this for a long time, the likes of GitLab and Zapier, who have been fully remote since day dot. But for a lot of us it was very much a learning curve, although I think startups have fared better generally, just much more technologically enabled, SaaS centric from the get-go. So it's been less of a learning curve, but still an adjustment. Prior to COVID, we were an in-office company. People would work from home from time to time.
Yeah, perfect. That was a very good Q&A session. That was
much quicker than last time.
Much quicker than last time. You've been practicing with your cat.
Yeah, that's the one. I don't have the cats today.
No, I do miss the cat.
Yeah.
I do miss the cat. It's strange seeing you in the office, actually.
Yeah.
So what we're going to do, part of the reason for doing this session is to focus on the core values, emotional intelligence, and leadership aspects of a CFO role, which are related to the Future CFO program. And obviously those softer skills and those leadership skills are quite often what separate, I don't know if you agree, someone from a head of finance FD role to being able to be that CFO. It's the emotional intelligence to partner and influence the strategy, but also lead the team and build a best-in-class finance function that can operate without you being there. Do you agree with that?
I would agree. I also think like the other kind of difference between kind of a head of finance versus a CFO is as a CFO, as a head of finance, you own the finance and you make sure that the finance is running, and that, you know, you have your backwards looking functions, and you know, you're under your controller, and you have your more kind of FP&A type streams running as well. I think the difference when you kind of get up to CFO level is it's got to be broader than that, and you're not just owning finance, you're really owning the company story. And that means that you care as much about sales, and not just like the revenue number that comes in, but actually, you know, the mechanics of the sales team and like the output of the product team. And then you do just in terms of, you know, I am doing my part in this. You own the whole picture, and you have to be able to marry all of those pieces together. The team I spend the most time with, probably even more than my own team, are like the go-to-market leaders. You know, working through, you know, where are the kind of bottlenecks coming in like the short term versus long term strategy, where we need to kind of thread the needle on what works now with what needs to work in the future, what that means for, you know, what reps are performing and how we think about that, and then how that translates down into the metrics, and always thinking ahead to kind of the next funding milestone, which for us will be a Series D at some point in the future.
Yeah, a reasonably significant one by the
I hope
scale
so.
of it.
Yeah.
When do you think that you know, became a CFO? You know, if you had to put a title on it, on your journey, where do you think that happened?
Yeah, I think it's definitely when so from like a personal level, when I stopped doing, like I vividly remember our head of finance joining and then being able to step away from things like bookkeeping and, you know, actually being involved in day-to-day kind of managing the books, and just I think like when that functional team was in place with kind of subject matter experts, you know, our people person is a million times better at people stuff than I am. Our finance person is a million times better at pure finance stuff than I am. Once that team was in seat, I was able to kind of level up to that big picture and really say, okay, not just things aren't just operationally working. You know, the lights are on, and that's great, and the lights always need to stay on, but now we're going to start focusing on how we really move the needle for the company. And for me, I think that was around 2018 that kind of really kind of came together, just partly in terms of, you know, when the first kind of team were in seat and was kind of able to carve out that time to step up that thinking to that level.
And do you, in terms of your role at the moment, it's quite a difficult question, but I'm going to ask it anyway. Can you work out percentage-wise where you face and do elements of your role?
Yeah, so I would say I probably spend about 20% of my time just, you know, working with my leads, managing, you know, talking about what's going on in their functions, you know, what's going on in legal, what's going on in IT, what's going on in people, what the challenges are. I probably spend about 50% of my time with the go-to-market team, like working on various bits and pieces. And the reason that is, and this would change if it was potentially a different company, but that's where our opportunities for acceleration are. And so in terms of like where's the most needle moving place to kind of spend time and drive the business forward. So yeah, about 50% of my time there, and the other 30% of my time, I would generally say I'm spending just digging into things, researching, thinking about the big picture, trying to put together, you know, possible paths and routes, and thinking about the company story.
And when the Series B and Series C happened, what percentage of your time was on that?
100%. Well, 100% of normal working hours, then you have everything else on top of that.
Yeah, okay.
One of the things I would say to anyone doing a fundraise is put in as much energy as you need to do it really, really quickly. It looks really good and you look really on top of it if, you know, you're speaking to your VC's lawyers and they send you something like a request and you get it back to them the next day, even if it's, you know, taken you all night to do and it's like a massive long thing that you've had to put together. Being able to turn around that really fast is great, because once you're past the kind of pitching stage and you're into due diligence, just you don't want to give anyone time to, have second thoughts, and equally it's just going to be a distraction and take away from everything else you're doing until you can get that out of the way. Equally, in kind of like the run up to getting term sheets, probably spending about 50% of my time with Tim, our CEO, working on the pitch deck. Tim would be there to be the vision person to kind of give the company story. I'd be there with the backup and the evidence, not just on like the financial metrics, but on the like, no, this is why we're confident in this, because this part of the market is growing at this rate, or we think we can achieve this because this is what the attainment has been in sales historically, and this is how long people take to ramp. And to be that kind of person there in the background that knows everything, and putting together the big cheat sheet document that just summarizes all of those metrics in the background, so you seem like you just have this magic ability to recall all of these numbers. I actually think it's easier over Zoom because you can just have that sheet open in like one of the corners and sound like the most knowledgeable person in the world.
So that's why all of the funding amounts have gone up in the last few months.
Well, I mean, the funding market is just insane at the moment. If you're a really early stage company, say you're doing like 1 or 2 million in ARR and you're growing at, say, 200% year on year, like sometimes you can get 150 times multiple from the likes of a Tiger or the SoftBank.
That is scary stuff, isn't it?
Yeah, really I know a founder who's had like a round just like that. If you're growing fast enough, the amount of money that's out there is insane right now.
And that 1 million, 2 million ARR space is very, very popular, isn't it? It's very good volumes in that space.
Yeah, and it's natural, right? You get a drop off after each successive stage. I think generally a company is considered pretty unkillable once they get to like a 50 million ARR mark. But getting to 1 or 2 million ARR, like a lot of companies reach that stage. You can do it through a very early adopter market. You can be very, very targeted at that point. You don't need to broaden out your product use cases to go after different segments. For us, it was SMB and mid-market law firms with the first product that we ever had, and we were able to take that easily to that point, and we didn't need to even think of another product, another use case. You can be very, very focused and grow very, very fast at that size. Once you start scaling it up, that's where some of the things, crossing the chasm and all of these things come across once you're past that early adopter market, and you need to think, okay, what do we need to do to be able to expand out this use case so that not just a legal firm finds this as like a good solution to their challenges, but what's the equivalent for finance, what's the equivalent for healthcare, and gradually grow that out, and sort of not to neglect things like product marketing and making sure that product market fit is really aligned.
It sounds like your role and the CFO's role in a Series A, B, C round is very, very important in a number of levels, but also it's crucial that they're a facilitator to keep the momentum going.
Yeah.
That momentum piece is really important, it seems, from what you're saying.
Yeah. And in an early stage company, and some people will have a CFO title, some people will have a COO title, like it blurs, like the roles do split out like later, and like I would say we're not even there yet at Tessian, but going forward, when you look at an IPO company, a CFO is all about investor relations and fundraising, and a COO is all about like operational excellence in the business. At this stage, they're kind of one and the same. And in terms of operational excellence, I think it comes down to 2 things really. Number 1 is everyone in the business understanding the stack rank of the priorities, and that's the what do we need to do. So it's, in theory, you should be able to go to anyone in the business and say, hey, if we've got this decision, like what decision would you make that's aligned to the priorities? And if that has been cascaded down successfully, most of the time you should get people aligned to the same answer. I know that growth is more important than churn, so I will prioritize A over B, for example. So that's the what do you need to do that needs to be really clearly communicated in as simple a way as possible. And then there's a piece on the and then how do you do it? And that comes down to values. And this is why I think the CFO role ties really nicely in with the values, because as you scale, you need to be able to delegate more and more. And it's especially hard for early team members and founders and people who have real emotional attachment and are used to knowing and controlling everything. But if you have everyone crystal clear aligned on what the priorities are and how people need to execute on things as a business, and that is really the values. We will do things in a way that is doing the right thing and is human first. If everyone is crystal clear on those two things, you can never go too far wrong. You should always be able to kind of course correct to something that's aligned to kind of the longer term vision.
We're going to do one last thing on that, and then we'll dip into the values. Were there moments during the CFO role on a B raise or a Series C raise that, in keeping up the momentum, obviously you're working in the evenings and in the mornings, did you have to have a conversation with the CEO at any stage and say this is too much? How have you approached being pushed to your limits?
I mean, we had like an agreement of just like, it's gonna be like this for 2-3 weeks, and then like gonna get some extra holiday days and take some time off. But it is just one of those things that sometimes, it's not a forever thing, but sometimes it is just one of those things that it is better to just push it through as quickly as possible. You just seem more competent in the eyes of your incoming investors. You're very on top of things, and it just removes like the distraction in the rest of the business, because you're pulling in everyone to answer all of these DDQs. You're pulling in product, you're pulling in engineering, you're pulling in finance, taking up a lot of people's time, and it's a stressful, uncertain period. And like the sooner you can get that to certainty, just the better for everyone. And then you can start planning and figuring out what to do with all the money.
And I'm assuming with cheat sheets and prep you can get so far, but there's always going to be that different question or different approach, so you can never be fully prepared for anything.
Yeah, but then people don't expect you to, this is like how you do it well and have the cherry on top and seem as prepared as possible. But every time there's a new question, it goes into the cheat sheet for the next pitch. You're probably in at least 20 pitches for like a raise to kind of get to a couple of term sheets. Over the course of that, a lot of the questions will be the standard ones. What's the LTV? What's the CAC? What's the magic number? Some people will be like, oh, okay, which product do you usually land with? And like, how long does it take to do your first upsell? And it's like, okay, we'll go and get that information. We'll follow up with it, and you follow up with it after the meeting, and then you add it to the cheat sheet, and then the next investor that comes and asks it, and you're like, oh yeah, we've got all the answers, we know this.
Everybody needs a cheat sheet.
Yeah,
everybody needs one.
And I mean, our cheat sheet ended up being like 30 pages long with every
that's a book for me.
Yeah, but it's it's magic, and it also meant that if one of us was unavailable to take a meeting, it opened up more flexibility, because as long as one of us had it and we knew the pitch, we could go and run in parallel.
Yeah, it makes a lot of sense. Thank you for that. Talk us through the Tessian values, how you chose them, and how you keep evolving them.
Yeah, so I like to think of values as, so I would say that like a company is like having a company is like having a child, right? And like when it's really small, you're with it 24/7, everything it's doing, what time it eats, what it's wearing, you have complete control over where it goes. And then the company grows up a bit, and this is probably around the point where you have your first layer of middle management, and it's going off to school for like 5 days a week, and there's like this 8-hour period where you don't have eyes on it, and you get regular reports, and you feel like pretty involved, and you still have a lot of control over it. And then you kind of end up like, when you're sort of 120 people, is like the teenager stage, and it's off driving and going to bars and dating. It's like, okay, like I have no more control over what you do. And really, like, I think the way you get comfortable with it in a company is the same way you would get comfortable with it as a parent, which is knowing that you'd raised it right. And really, that's the values. And again, it comes back to, if everyone knows what the priorities are and everyone is aligned to executing on those priorities in line with the values, you can never go too far wrong. And in terms of like figuring out the values when you're 10 people, like, the founders will just kind of decide, right? And then when you're maybe 60 people, the founders will, propose something and test it out with the business. By the time of like 120 people, the company's really echoing back to you what the values are. And so we went out and we, surveyed people. Here are our current values. What do you think are the great things about how we work at Tessian? How would you describe what's unique about Tessian and what's important in your day-to-day, and then just kind of distilling that down really into what that really means. And it's a mix of things that are kind of like sort of who we are, so things like human first, and we do the right thing, and then how we work, which are things like craft at speed. We use the Pareto rule, and the 20% of work that gets us to 80% of the way there, and then we're iterative rather than coming out with the perfect solution straight out the gun. And it's just a case of constantly just keeping an eye on them, but also just making sure that you're really clear in how you articulate what that particular expression is. So human first is an interesting one. It's probably one of our core values, but it doesn't mean that we will do everything all the time to be as nice as we possibly can. Like, that's not what it means. It doesn't mean that we don't make the hard decisions. It just means that when we have the hard decisions, we go about them in a compassionate way. And it's really important, especially as you become bigger, to be really clear on giving examples as to how those values express, because you will be further away from each expression in people's day-to-day work.
Is human first one of the early values that stayed the longest? Because I know your values have evolved, but they've come from a base layer of 5 or 6. Which one has sticked around the longest?
Interestingly, like, human first was kind of spread over a couple of values, and it was only really in this cycle that we were able to distill it out. It's just one of those. It's hard to explain. Like, as I said, like, the company echoes these things back to you. It was kind of hidden amongst like a couple of values, such as like integrity and kindness. And when we went to the company and asked them to speak about it, we actually went from 5 values to 6 that were just really clear propositions, and human first was actually distilled out of a number of others, and the other ones kind of evolved and changed. But it is our first value, and it is the one that when we think about kind of what's really unique at Tessian, like, looking at that in like a really holistic way, it is what, if you ask any Tessians, that's the thing that they always point to.
That's really interesting. You with people and IT and other elements under your role, what's the key to making that a success as more and more things are added under the CFO position?
Yeah, I mean, the main thing is, I am not an IT manager, and I understand enough in terms of like the high level of what we're going to achieve, but I know that in terms of the specifics of how we go and execute on implementing our SSO or whatever, like, you've got to accept that like the people that you've hired are much better at this than you are, and let them be. And again, it just comes down to, are they aligned on the priorities? Are they aligned on how they execute? Make sure that you're taking in and listening to any feedback that comes from the company, positive and negative, making sure that you're distilling that down and feeding it back so that there's that positive feedback loop of like positive reinforcement on the things that are working well. And just kind of, you really do have to kind of lead through others. Like, I don't do any IT myself, but I look after IT and help them think through. For example, when we go to set our OKRs, all of my leads will get together and we will think about, the strengths, weaknesses, opportunities, threats, SWOT analysis for the whole business, not just for our teams, and then how what we're doing can feed into that, how we can accelerate the good things, how we can mitigate some of the threats, how we can offset some of the weaknesses of the company through our teams, rather than building like a G&A empire. It's one of the hard things being in like a general and administrative function, which finance and finance leaders ultimately are, which is that you're not meant to be the star of the show. You know, generally companies aren't built because it's like, do you know what? We're going to build this company, and the reason we're building this is because we want amazing processes and amazing finance teams. Like, you know, you're there to facilitate probably like a product and a growth story. And you have to have like that sort of almost like service mentality, you know, being servants of all, and servant leadership, and that you're there to accelerate the rest of the business. I think ego and like these roles and wanting like the shiny and the attention and the clapping sort of sits very ill with like how these roles work best. And you've got to kind of think through the lens of what are we doing and how does it help with the business's priorities. For example, in finance, we tend to be numbers people. That usually goes nicely hand in hand with being, you know, type A, processy types, you know, wanting to have everything completely perfect, the perfect framework and solution. And sometimes that's what the business needs, but sometimes the business needs flexibility, and it needs to flex on a particular deal because actually the revenue is more important at that particular point in time than having that perfect consistency. And I think that's really, really key and important in making sure that you're not building like a process empire. That kind of process element is a comfort blanket, but at the end of the day, you're there to drive the business to the best possible outcomes, and it needs to be like the right processes at the right time.
You've obviously gone from 10 to 30 to 50 to 100 to 250. How has your recruitment process evolved, and is there anything that's stuck and remained for the whole of that longevity?
Yeah, I mean, talent is hard. I was speaking to someone about this earlier today, and it always surprises me that in kind of the old world model of HR, that talent acquisition and HR or people were kind of under one umbrella, because they're very different skill sets. Your talent team or your sales people of your people, and your people team or your customer success team of your people. You know, it's acquisition and then retention and development. And success ultimately. In terms of, I think the best talent people are really focused on that, and they are very sales-like. You know, they are very articulate, good at selling, but in the same way that a good salesperson understands the value of using Salesforce, they understand the value of the data that they're creating and can leverage that. In the early days, you just do what you have to do. As you get bigger, you start to be able to kind of wean yourself off some of the things like, you know, relying heavily on agencies, having kind of more structured processes, testing, you know, being very clear on like, these are our stages, these are what we will negotiate on, this is what we won't negotiate on. It becomes much more evolved over time, and over time we've leaned heavily on automation. The automation journey has been really interesting. In the really early days, we had a ton of automation because it was one person looking after it, and they just didn't have the time of day to be able to do a lot of stuff. So it was like a very mass outreach approach. You know, play the numbers, play the probability. If we reach out to 1,000 people and 100 get back to us, there'll probably be 10 good people in there. We'll do that. And just kind of figuring out what works and enabling that. Then over time, we've been able to kind of balance. Actually, we can be much more focused when we have the resource for people to focus and specialize on one particular area of talent. You know, it's not the same person doing sales recruitment as doing tech recruitment. And then you can actually take away and change some of the automation just to handle some of the admin-y pieces, and have a bit more of like a white glove service once you're big enough to have those separate dedicated talent partners focused on each area. And I think, you know, that's just a natural story of a lot of progressions in startups and scale ups, that things naturally get more specialized over time.
So in your world now, you would have, or earlier on, I suppose, when you had the team split, the HR team and people team would focus on things like onboarding and career development, but the talent team would be all on, kind of
Yeah, I
bashing the
mean
drum
that
about what
that
you're.
split, I would say do that split from day one. Like don't, you can have talent roll up into people, but you do need dedicated people on each. Like it's a fundamentally different skill set. Talent people are salespeople, and like that is a very different skill set to someone who's working on learning and development and dealing with employee relations and trying to embed culture. Like it's just a very, very different mindset. With like it's much less transactional on the people side than it is on the talent side. Like you need them to be like really hyper kind of competitive on the talent side and really want to like deliver really concrete results. That split I would do on day one. And then over time, as your talent team grows out, to gradually specialize people by whatever makes sense to your business. So we split it into like geography for one, and then we split it by the kinds of roles that they look after. So the people who look after our sales roles also look after G&A, but we have dedicated people looking after our tech and product roles now, just because as we get more complex, like, and some of our needs get more specialized. We want people with really deep relationships in those markets. And you gradually, I think, over time move to more of like an exec search type operation where you have like a lot of relationships in the market. Whereas in the early days, you have no reputation, you have all of 5 people and like no time to do anything. You're just going to have to go out and hit everyone fresh and be like just quite like a pushy salesperson type sell just to kind of get your foot in the door.
Yeah, that makes sense completely. What have you done in terms of steps to ensure that you're kind of inclusive and embracing different backgrounds when you hire? Because I know that's something that Tessian and yourself are very passionate about.
Yeah, I mean, one thing I will say is that like it doesn't, in theory, it should just happen, right? And and you go online and people will be like, write a really nice job spec and like that's really inclusive. It's like you should absolutely do that, but that is a table stakes and that is not going to make a difference long term. Fundamentally, I think the first thing that you have to do is you have to look at the inclusion piece and the like equality piece before you try and look at diversity, because otherwise you will just have a leaky bucket and you'll put diverse people in and you won't be inclusive or equitable and they will fall straight out. In terms of So the first thing that you can do in terms of inclusion is you need to set the tone, especially through, your values, and it has to come from the top that like, you are not going to tolerate discrimination. I mean, hopefully you won't have like lots of incidences of that. But the best way to kind of do that is a lot of it is not, your sexual harassment type discrimination. A lot of it is just unconscious bias popping up in various places. The important thing is that there is the equity of opportunity, and it's just making sure that you are thoughtful enough that whenever there are more than one person who could fit into a particular category for a potential promotion, or if you're thinking about a discretionary benefit and it applies to one person, who else does it apply to? It's kind of a mindset of thinking about, if everything you did set a precedent, would you still do it, and would you do it for everyone? And then doing some quick wins such as establishing salary bands is really powerful, and just a really like light touch leveling framework that allows you to kind of make sure that it's never going to be completely perfect, but you have 3 people who are L3 engineers and they're all within that band. And so that it can't get too far out of whack. And yes, sometimes you get someone's level a bit wrong, or you think they're at the top of the band where actually they're at the middle, but it just constrains how far wrong you can go. And then just making sure that it's a welcome place. I have a love-hate relationship with employee research groups, but do what feels right in the company. If, for example, the women in your company feel that they need like a place to sort of just be together and celebrate themselves, give them that space, give them a bit of budget to go and have a social and get together and build those connections, and just try and build as many cross connections as you can across the business. And then you can kind of start looking at the diversity piece. And as I said, the pool in tech, and I'm assuming that we're talking about tech businesses which are heavy on sales, heavy on engineers, neither of which are, if we just look at gender, very low gender representation. If you just go out and play the numbers, you are not going to get anything other than something that is representative of the pool, right? If the pool is 2080 and you just play the numbers, you'll end up with 2080. And this is where, when you're a bit bigger and you can really invest in time, making sure that you have balanced long lists sounds grand, but what it just means is that you're focused about outreach and making sure that you're doing things to qualify people up and into roles rather than qualify people out of roles. Once people are in your pipeline, everyone should be treated equally. Anyone from an underrepresented minority should not get special treatment in the interviewing process, but you can, prior to that process starts, go out and reach out to those particular groups and communities and try and get a larger proportion of them to get into your process. And that's probably the best way to balance making sure that you're not, creating a different kind of inequality within your recruitment process, but also making sure that you don't just end up with the representation that exists. And the other key thing I would say is, and this one feels a bit counterintuitive, if we think longer term and we think, let's say the pool is 25-75 of underrepresented minorities and the majority, if one company got to 50-50, another one is 0-100, right? By definition, if you look at the macro picture, the only way to change it over time is to get more underrepresented minorities into these industries. And so once you reach the size that you're able to start bringing in juniors and training people up internally, that's where it's important to be really, really hyper focused on your kind of junior entry level roles and making sure that you're getting as diverse a pool of people to apply to those positions, because that's where the future change will come from. And it will be terrible for your pay gaps because you're bringing in lots of underrepresented minorities into junior roles. But fundamentally, if you don't do that, that overall macro dynamic of 25-75 will never change. We've got to fundamentally shift that set 25 up to 30, 35, 40. And if people aren't already in those roles, you need to give them an entry route, and that is usually going to be juniors. But I think truly, if you're really, really committed to improving diversity in the long run, yes, you have to be inclusive, equity of opportunity, make sure that your people who are from underrepresented minorities get the same opportunities as everyone else, are able to develop and grow within the company and retain and reach senior positions. But you also have to focus on getting more people into the talent pool overall, and that has to focus on new entrants to the pool, whether that's career changes, coming into, say, engineering, or if it's graduate programs getting people into sales.
Yeah, makes sense. When did you bring in salary bandings, out of interest?
Yeah, oh gosh, this was years ago now.
Were you about 100 staff or?
No, less, probably about 60.
Wow.
So most VC-backed businesses will have access through their investors to something called option impact. So you can equally go out and buy the Radford data set, for example, and they'll have 6 levels, and they'll have salary benchmarking. And we just said, you can see the various percentiles, 25th, 50th, 70th, 90th percentile pay, and we just said, okay, we're going to pick this percentile, and between this percentile and that percentile for a given level, that's our band. So these benchmarking companies do a lot of the work for you, and you can just kind of port that over and use that. But that, and having a formulaic way to assign equity is really, really important. As you grow, people are going to compare their compensation more and more, and no one's ever, if you have any of Peakon or Culture Amp or things that survey your people, you're never going to get 10 out of 10 on reward. The benchmark for what people say is how happy they are with their reward is always lower, right? Because everyone always wants more. But the way to do it best and get as high as you can across the benchmark is to have a really clear process for pay that is transparent, so that people know that even if they don't like what their pay is, they understand it and that they know that it's fair.
Yeah, thanks, Sabrina. If anybody's got any questions, by the way, put them in the chat box. I've got a couple more, but we may have 5 minutes at the end. So if anybody's got a question, yeah, pop it in the chat box and I'll try and look at it and get it in. The last 18 months has been a bit of an adventure. How's that tested your leadership style, and what have you learned from it about yourself?
Yeah, so I mean, I'm naturally an introvert. So I mean, more than happy, overjoyed to be kind of working remote most of the time and not having to face to face. So for me, it's more about making sure that I am spending the time to go out and reach to people and have those moments, and just, slacking people, hey, how's it going? Or making sure that, we have those informal check-ins from time to time. Because I'm just naturally someone who'll happily just, go into my own world and not speak to anyone for 3 weeks. But equally, there are a lot of people who need much more in terms of interaction. It does force you to be much more conscious about how you're showing up, and also about making sure that, especially in a leadership position, that there's that almost like equality of access, and that that you're making sure that you're spending time with all of the people you should be spending time with in like a relatively fair way, and that door is always open.
Do you go in the office now? How many days are you going in? Is it 1 day a week? What are you?
I mean, it varies. This week I'm in 2, last 2 weeks in 0. It probably averages out to maybe like 1 day a week. But yeah, it's when I need to go in and do something. So I have a meeting with an external client today, so that's why I'm in today. But I mean, I'm quite happy working remote, and yeah, it works for me. As I said, I really am a big believer in letting people do their best work in the way that works best for them.
How did you find the Series C versus the Series A? How different was that?
Very, very different. So seed Series A, it is all about story and opportunity. And obviously, like, by the time Series A, you want to start having that growth rate. But, it's kind of easy to go from 500,000 to 1 million, and you're like, it's 100% year on year. It's like, yeah, but it's quite a small number. Like, try doing like 3 million a quarter. Like, that's when it gets kind of really hard to do. But a lot of it's on the story. It's about the team. It's about the market opportunity. You're not going to have as developed metrics. By the time you get to Series C, you're getting drilled on the metrics. It's like, okay, that's your S&M efficiency. How are you calculating that? What goes into that? How are you going to drive that up by 5% next year? You have to have like a lot more focus on the metric side of the story as you start getting bigger, because they're thinking, by the time you get to sort of 100 million, that's when you're going to be, an IPO-able size. Most companies these days, are going public at around like the 150 million ARR, at least in security, which is, the industry that we're in.
And on the IPO, that's a very good segue to a question you've not even. Oh, you have seen the question, but I don't think you've looked at it. But that's quite clever. Drew's asked, what are the key things the company should consider if they're looking to go into an IPO process?
Yeah.
No.
So I will caveat this with that I've not been through the process, but I do speak to IPO advisors, and what I would say is the general consensus is 2 years before you need to start kicking things off, start building relationships with analysts, and like this is the point at which generally the CFO role becomes much more focused on investment relations rather than like a lot of the more operational stuff. At that point, you would expect CFO and COO to split out in a company. What I would say is that most companies I speak to and see do get an advisor on board, to kind of help with, especially that building that investor relationship, getting intros to, the analysts at the various banking institutions, and start building that up way in advance of a roadshow. There are also things like, especially if you're present in the US, things you have to start considering about equity, and, how your 409A valuation starts to get closer and closer to like your last round price, like over the 2 years in a run up to an IPO. But generally I would say 2 years before is when you need to start, is the general consensus.
And how many months or are you planning before the Series D? Is that 6 or 12? What?
I can't say too much, but more than 6.
Theoretically, yeah,
Yeah,
theoretically.
yeah. I would say around a year's time is about right. Generally, you probably have around, when you're smaller, I think they come sort of thicker and faster, sort of maybe like, once a year, and then, up to once every 2 years, sort of another round. It depends on kind of how aggressively you're pursuing various strategies.
Yeah, of course. Heather's asked, in terms of your remuneration policy when it comes to creating long-term growth decisions, um, what have you done from an LTIP or EMI process? What was the way up?
Yeah, so everyone has equity. It's no longer EMI because we're no longer EMI eligible, but it was EMI back in the day. In the US, they're ISO options up to the ISO limit, which is kind of like the closest that they have to an EMI analog. But yeah, everyone gets equity. Equity really is like the long-term variable incentive for most people. I personally have a strong belief that, salespeople go into sales because they love selling and they want to make a lot of money. Like, you have to motivate those people with money and like commission structures and things like that. Generally speaking, for your engineers, compensation is a hygiene factor. They want to know that they're being paid well, but they don't want to be thinking about pay 24/7. They want to just be getting on with their job. And I think generally I'm more inclined to give them like a total compensation rather than a base and like some fluffy performance-based bonus that's tied to like random targets. There's nothing more dangerous than the wrong metric, and unless you're really, really clear on specifically what you're tying a bonus to, you can end up with some really dysfunctional behavior. In sales, it's easy. You always want more sales, right? So you just motivate them to sell as much as possible. Equally, SDRs, you always want more leads that are qualified to a certain point because you want more sales. In engineering, I mean, what what do you really tie it to? Either it becomes fluffy and kind of meaningless and skews your performance processes such that it becomes about bonus maximization rather than actual performance, or you end up tying it to some metric like, I don't know, percentage of roadmap delivery, and potentially put yourself at risk of ending up with really shoddy work, or focusing on, for example, delivering the roadmap to the letter when actually what's better for the business would be to pivot to something else. I think you just need to be really careful with incentive structures. I think everyone conceptually likes the idea of a bonus, but as long as your total compensation is benchmarked correctly and you have the split of base and bonus that works for a given role, generally I would say if a role doesn't really need a bonus, just layer it all into base, and then have the equity as that long-term incentive, is what I would generally say.
And is that a quarterly investment process or is it an annual share allocation?
Yeah, so on join, everyone will get an allocation. Every year when we do pay reviews and, as part of the promotion cycle, we will review everyone to make sure that no one is on less than someone, if they came into their role today, would be on. And then when people hit 3 years, they're allocated a set of options that will start vesting at their 4-year date, because the original options are on like a 4-year vesting schedule. So like the vesting should be, they should have equity sort of vesting pretty continuously after the 1-year cliff.
And this doesn't need to be a financial question, by the way, with regard to anything related to fundraising or anything, but what is currently the major challenge you're working on at Tessian to take it to the next level, and how are
Yeah,
you working on it?
I think, as you have more, choice can sometimes be paralyzing. And as you get bigger, maintaining alignment and focus gets harder. You have teams and like the natural, teams that are very close knit. You need to kind of avoid empires being built up. So it's quite critical to make sure that there is complete alignment on what those priorities are, especially as you have more and more options and competing priorities, existing customers versus new prospects, new markets versus new products. So the biggest challenge is making sure that there is that absolute crystal clear focus and stack rank priorities that is just completely understood and embedded throughout the whole business. And it becomes harder and harder the bigger you get and the further the leadership get from the people actually going and executing on the strategy.
Yeah, there's a question here from Tim, and I think this could be not just with G&A teams, actually, it could be with all core teams. How do you motivate junior members when opportunities and titles and level of promotion might be more regular in bigger organizations?
I think if you're it depends what you mean by bigger organizations. If you're talking about how do you keep them here rather than going to an Accenture, to be honest, if they want to be at an Accenture, they probably shouldn't be at a startup. It's like a very different type of role. What I would say is that compensation becomes more important the bigger you get, because when you're very small, there is that breadth and that much broader, faster learning curve the smaller a company you are. So things like compensation and making sure that you're competitive in market, I think, become more important as you become a bigger startup or scale up. Then in the 10-person days you can sell people on just the opportunity and the close-knit team. I think you need to be really clear on what's important to you as a business at your given size and stage, and that won't always be the same thing, and there will be like a natural turnover of people who love the 20-person company but the 200-person company isn't for them. And that doesn't mean to say that a 200-person company is not good or a 20-person company is not good or that person is not good, but the puzzle changes and the pieces don't always fit the way that they used to. I think it's making sure that you understand that this goes for anyone in your business. Understand deeply what their motivations are. For some people it's compensation, for some people it's title, for some people it's scope, for some people it's work-life balance, and make sure that you just always have a plan of being able to show them what the next level looks like. And this is where eventually competency frameworks come in. Here's where you are, here's where you want to be, here's the gap, and here is, in given time frame, whether it's 6 months or a year, what you are doing to gradually move up in that way.
I think sometimes people's view of the startup and scale up space is that you don't have as many job title progression opportunities as you would in a FTSE business. But personally, I think there's the opportunity for startups and scale-ups to manage that whichever way they want to a certain degree. If you want to bring in someone as a junior analyst and have 3 or 4 job titles to get them to whatever role it is, I think that is your opportunity to do that. But I think there's a character to people that work in startups that the job title isn't as important as it is in a FTSE business. I don't know if you agree with that.
Yeah, I mean, really big companies have to be hierarchical, at least traditional ones, in terms of that's just how they manage that large of a workforce. Naturally, smaller businesses are going to be flatter in terms of hierarchy, and it's going to feel like there's less progression. But I would liken it to a pie, and a pie having filling and crust, and
lunchtime.
But if the crust,
talk about pies now.
Yeah, if the crust is the breadth, and the filling is your total slice of the pie. What some people really like the crust and want something that's really broad. Some people actually they just want a really big slice of the filling, but it doesn't matter if there isn't a lot of crust. And as the pie gets bigger, your part of the wedge and the crust gets smaller, but the total size of the pie gets bigger, and you get more of that depth filling but less of that breadth. And it really just kind of depends on what people want. And this is why for some people a 20-person company is perfect, and some people a 200-person company is perfect, and not everyone will love both. And it doesn't mean that crust is better or filling's better, but different people have different preferences, and that kind of changes over time. Yeah, and I think it's just making sure that you kind of surface for people the opportunity that they have, and just deeply understand what it is that a person wants and needs at a given stage in their career.
I agree.
Change over time.
I agree 100%. Understanding and having the ability to gauge what their genuine motivations and their intrinsic gains are from that role. I never thought
I'm really hungry now. Yeah.
I never thought we'd end this conversation talking about pies. I love pies, and I haven't had lunch, and I'm not going to be able to get one now, but I am going to have one in the next week. Sabrina, thank you so much for for taking time
My
out. Thank you everyone that could join us. Hopefully see you all again soon, and have a good rest of the day.
Yep, thanks.
Cheers,
Okay.
Sabrina.
Bye.